Welcome to the Startup Funding Espresso. I'm Hall T. Martin, where we talk about how to raise funding and invest in startups and the time it takes to drink an espresso. If you have a question about startup funding or investing, please go to the website, startupfundingespresso.com, and type in your question into the chat bot in the lower right corner to receive an answer. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot of startup funding and investing. In the early stages of the fundraise, angels are often a better fit than venture capitalists. VCs come into the round when there's strong traction and the business is well formed. Angels are go-to-market investors and like to come in early when the valuations are relatively low. The term sheet is typically a convertible note or safe note where the valuation is not set. Most angel investors are follow-on investors and are not going to take the time to set the terms and valuation of the deal. They just want to be in the deal and will write a $25,000 or $50,000 check to do so. They'll let a lead investor set the valuation in a later round. In the early stages, it can be hard to set the valuation since there are still many unknowns. Valuation is more easily set when the revenue traction is clearly defined. Start your fundraise with family and friends. As you draw the circle wider, go to angel investors. Bring a solid growth story with some revenue. Revenue demonstrates product and market validation. The product works and people will pay for it. Delay pursuing VCs till there's more traction. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start us into today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.